Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SIMCERE Pharma interim report. SIMCERE Pharmaceutical Group Limited provides a diverse range of businesses and services, including research and development of pharmaceutical products, manufacture of pharmaceutical products, sale of pharmaceutical products to distributors, pharmacy chains, and other manufacturers, promotional services for pharmaceutical products, manufacture of pharmaceutical ingredients, property management. The company focuses on various therapeutic areas, such as oncology, central nervous system, autoimmune, anti-infection, cardiovascular, and others. Its principal products include Sambucin, Endostar, ENWIDA, COSELA, Iremod, Xin and UOXIN, and others. The stock price of SIMCERE Pharma has skyrocketed in the past year due to several key developments and positive market sentiment surrounding the company and the broader Chinese innovative pharmaceutical industry. A significant factor contributing to this surge is the approval of new drugs, including Enzashu for ovarian cancer treatment and Leduc-Chi monoclonal antibody. Additionally, strategic R&D investments and equity offerings have signaled future growth potential, while positive analyst ratings and outlook from major financial institutions like UBS Group and Goldman Sachs have further boosted investor confidence. Favorable industry policies, such as new commercial insurance innovative drug catalogs, are also expected to drive growth in the biological pharmaceuticals segment, where SIMCERE operates. As the company continues its transition towards becoming an innovation-driven pharmaceutical entity, its sustained growth is likely to be a major driver of its stock price increase. The primary drivers of revenue growth for a pharmaceutical company can be attributed to several key factors. The innovative pharmaceutical business has seen significant growth, with an increase of plus 26%. Additionally, the fields of neuroscience and anti-oncology have experienced substantial growth rates of plus 37.3% and plus 41.1%, respectively. The expansion of commercialized portfolio of innovative drugs, Sambucin injection market share growth, increased patient coverage, and approval and marketing of COSELA in China have also contributed to revenue growth. Furthermore, the company has received significant upfront payments from AbbVie, totaling $0.055 billion, as well as option fees and milestone payments that could reach up to $0.055 billion. Tiered royalties on net sales outside of the Greater China territory are also expected to generate additional revenue. On the other hand, revenue decline can be attributed to a decrease in revenue from other fields, promotion service income and research service income, with declines of minus 20.5%, minus 20.5%, and minus 21.6% respectively. The company is indeed generating positive operating cash flow. The financial summary explicitly states this, and the data provided on pages 32 and 55 of the report supports this claim. For the 6 months ended June 30, 2025, the net cash generated from operating activities was Rm 867 million, a significant increase from the previous year's Rm 862,659. This indicates that the company is successfully managing its finances and generating sufficient cash to cover its operational expenses. The company's debt level and interest expenses have undergone significant changes. The debt level has increased by approximately 13% from RMB 1,008,772 at the beginning of 2025 to RMB 1,143,637 at the end of 2025. Notably, interest expenses have surged by a substantial plus 579%, rising from RMB 51,300 in 2024 to RMB 34,865 in 2025. This indicates a considerable increase in financial obligations for the company. The management is optimistic about the company's future prospects. They plan to focus on disease areas with significant clinical needs, indicating a commitment to addressing pressing healthcare issues. To achieve this goal, they intend to strengthen their marketing capabilities, expand product coverage, and develop products with high market potential through in-house R&D efforts and strategic partnerships. This multifaceted approach suggests that the company is poised for growth and innovation. The company's financial summary reveals that it has engaged in 2 key shareholder return initiatives. Firstly, the company has paid dividends to its shareholders, as indicated on pages 48, 52, and 54 of the report. This demonstrates a commitment to distributing profits back to investors. Secondly, the company has also bought back shares from the market, as noted on page 75. This move is likely aimed at reducing the number of outstanding shares and increasing earnings per share for existing shareholders. Concerns about inventory buildup and supply chain disruption. Our financial summary reveals a growing concern regarding inventory buildup in our supply chain. The data indicates that both raw materials and semi-finished goods inventories have seen significant increases, with raw materials rising by 11% and semi-finished goods increasing by 24%. These numbers suggest that we may be experiencing issues with inventory management, which could lead to potential disruptions in the supply chain if not addressed promptly. That concludes the financial summary for SIMCERE Pharma. Feel free to comment below, and I will be happy to answer them when possible.